Comes less than a week after American Airlines extended its cancellations through April 7. We discussed this a bit earlier, Mike. Clearly, it's been suffering in the short term over the last couple of days, as well as year to date. Remarkable sort of resilience in analysts' kind of sentiment on it, that this is just a delay, not a long-term shift in the company's market share.
The long-term order book and the sort of free cash flow model when they are in full production mode, I think, has still a lot of analysts, in their camp. I guess the stock here, it's really trying to make a stand. It was in a precarious spot, the very low end of the range for the year, and it did come back during the day. So I don't know if that's consequential or is that kind of wishful thinking by some traders hoping that this is another low.
Steve Leisman did a great job of laying out the impact next year, the forecasted impact on GDP because of the shutdown in the production line. Do you think that puts any political pressure on the FAA to work with Boeing and to push this forward?
Personally, I think the FAA is really licking its wounds over this. They never really had complete sign-off on the MAX jet before they left the factory and went into full service production on that. So I don't think we're going to see any of that play into it, despite the fact that it may mean 1% to GDP.
Mike, to what extent does a further delay, if we got one, start to change people's sentiment on this, that this is more than just temporary delays?
It's been incremental over the, I was saying a while back that if this was just a lost year for this model, then the market was fine with it. They're willing to absorb it. It's going to come back next year. If it starts to look a little more like a lost generation, for production, I don't think we can say that that's the case yet. But I do think that patience has worn thin over the course of the last 8 months or so with this. So I don't think there's a lot of benefit of the doubt left.
Just want to bring up an S&P 500 intraday chart at the moment because we're slipping a little bit as we approach the close. And Mike, still on track at the moment for a record close. And we were never hugely higher today, but we've slipped right down to 4 or 5 basis points higher on the S&P.
Yeah, it's obviously been a kind of a pretty good run. I'm looking mostly at how positioning seems to have gotten pretty aggressive. People kind of bought what they needed for the end of the year and see if it could just kind of levitate its way higher from here. So there wasn't really a lot of kind of organic demand going on today. Although I will say small caps are outperforming. The Russell's up another 0.4%.
Keith, you like the Russell?
I do. I've always liked the Russell, and that's the one index that I've always looked at where that had to start to catch up with everybody else before I could really believe in a sustainable rally. It's almost gotten there. It's not gotten back to the August 2018 highs, but it's been pushing forward, and it's really had a nice run in December.
It's probably likely that there are a lot of investors who are feeling some relief that we're not seeing a repeat of the run-up to Christmas that we saw last year. All right, here we go.
Still a week to go, Contessa.
Well, there is. Thank you for that, Mr.
The
Britt.
exact opposite, actually, in this whole setup.
Yeah, exactly. All right, so here we go. We have 2.5 minutes left. Mike, with more on the market internals?
Yes, which are somewhat mixed, actually. If you look at up versus down volume on the New York Stock Exchange, obviously you're skewed a little bit to the upside, but that's not a dominating performance by the bulls. It's still moving in the right direction. New highs versus new lows, though. And this is benefiting from the fact that we have anniversaried the weakness in December of last year. That's very, very healthy, close to 200 new highs in the New York Stock Exchange, almost 10 times as many as new lows as there are. And then in terms of the underlying tone of the market, the S&P high beta versus S&P low volatility. This is essentially aggressive stocks versus defensive stocks. And this is over the last 10 days. Obviously, the high beta names, semis, things like that, including financials, have well outperformed.
We're just under 2 minutes left. Let's get to Rick for a check-in on bonds. Rickster.
Good afternoon, Wolf. Intraday of 10s, couple basis points higher. That's been the word lately. We're creeping up a bit, curve steepening, almost the steepest it's been since July at 26 basis points. Look at a 1 week of 10s. We keep chipping away and stopping right around the same point in the high 180s, not quite closing above 190. Finally, the dollar index, hooray, up 1/5 of a cent today. But as you see on this chart, that was just a small bounce from fresh lows going back to July. Bertha, today is like a mirror image of yesterday in the NASDAQ, pretty much about the same range.
Pretty much, and you're seeing Apple continuing to be that major force. I looked at the impact of Apple this year, and it is responsible for nearly 40% of the NASDAQ 100's gain the best gains in 10 years. And that is more than the next two stocks combined, which are Microsoft and Facebook. Chips have also been the major driver. They're on pace for their best year since 2003. Those are among the all-time highs. Also had an all-time high in healthcare with Intuitive Surgical as Congress passed that funding bill, which will wipe out Obamacare taxes on medical device makers, insurers, and the Cadillac tax. Over to Bob.
Almost 200 new highs you heard from Mike at the New York Stock Exchange. Other than semiconductor stocks, it's the banks again, breakouts. We've seen it all for the last 2 weeks. Goldman Sachs, Citigroup, Bank of America, Morgan Stanley, PNC, all at 52-week highs. Those Boeing suppliers also weak again. There's the closing bell, the Dow Jones Industrial Average, barely eking out positive territory, fighting it out to see whether we can end the day positive on the S&P 500.
Welcome to the Closing Bell, everyone. I'm Wilfred Frost.
And I'm Contessa Brewer in for Sarah Eisen today. There's a lot of brewers around here today.
They're all very good.
Along with Mike Santoli, CNBC Senior Markets Commentator.
There are a lot of beers over there, which we're going to be discussing with Anheuser-Busch InBev in a little bit later in the show. But first of all, let's check in on where the markets close today. Record all-time highs once again for all three of the major averages. In fact, today the Russell led the charge intraday, up 0.5%, not at a record itself, but the other three big cap stocks, big cap indices, all at records following slight intraday gains.
We are moments away from earnings for FedEx. We'll bring you those numbers and instant analysis as soon as it hits. Joining us to talk about the market day, Keith Bliss, CEO of IQ Capital USA, still with us, along with Patrick Palfrey, Senior Equity Strategist at Credit Suisse. Mike, let's begin with you. It looks like there's just a lot of unrestrained optimism going into the new year.
A good deal of optimism, or at least a lot of comfort with the way the situation looks going into year. And very much the seasonal forces were driving things today. Just a reluctance, I think, to sell for any particular reason with any urgency. Just you'd rather wait till January if you want to take some profits because of tax reasons. And so with that, that's one of the reasons we do get this kind of levitation in the indexes right now. I do think the thing to look out for, to your point, Contessa, is if people get too overconfident that, hey, nothing can go wrong here, we're good with whatever might come along into the new year. I don't know if we're there yet, but we might be getting close.
Patrick, what's your take as to how optimistic we should be going into the new year?
Well, I don't think investors are looking for what can go wrong. Right now, we got data this morning out. Industrial production continues to look very strong. The housing data also looks firmer. Both of those are allowing investors to take a more positive tone for the market and is really going to be the catalyst for what we expect to be another great year in 2020.
We were talking earlier a little bit about the federal deficit and debt. I know that you're keeping a close eye on bonds and this search for higher yield. How do you factor that into the short term that you're looking at early in 2020?
Well, it's interesting for me. If you take a look at what the trade has been in December, you've seen a rotation out of, what I would call the safe haven bonds, both U.S. Treasuries as well as investment-grade corporates into high yield. And that is also very supportive for equities. So people are actually willing to accept more risk. There's been a few things that have cleared out. We've got the first phase of the China deal. People are looking forward to the end of the year. We're up 20%. I don't have the markets overbought at all here. We've still got some room to run. The S&P 500 for me and my work can run all the way up to 3270, somewhere in that range before you even get there, and the Dow above 29,000. So when you factor all that stuff together, again, in my melting pot, I think that despite federal deficits, despite what's happening with bond prices, interest rates, I think we're still very supportive for running here further into 2020.
Point out the FedEx trading down 3%, numbers just out. We're digging into them. We'll have you all the details you need to know in just a moment. Keith, just want to also mention you've been looking at commodity prices as well.
Yes.
What's that telling you?
Well, again, the same sort of story. People are getting comfortable with the global economy. Copper is overbought in our work. Oil prices are surging as well. And also, when you look at it, it's not necessarily a commodity, but semiconductors, not only have they been on fire for the year, but in December, they have just taken off. And I think a lot of that has to do with the China trade negotiations, but that also is a harbinger for what people really think about the global economy. Semiconductors, microchips are in everything that we use around the world, especially in retail products. If we think we're going to sell more semiconductors, which they think they are, then that also bodes well for the global economy, which bodes well for all risk assets, including equities.
Let's move on and talk about Apple, which hit an all-time high in today's trading. Two Wall Street firms out with dueling notes on the stock. Josh Lipton has all the details from both those notes. Hi, Josh.
So, Wolf, there aren't many analysts covering Apple that rated a sell, but the team at Rosenblatt does. And today, analysts there saying that iPhone sales in China fell about 30% in November, year over year, citing their own channel checks there. On the other hand, a more upbeat note from the team at Cowen. They say Apple remains one of their favorite ideas, in part due to a new 5G iPhone on the way and continued strength in wearables. Yes, market share loss in China is a risk, but that could be partially offset, they argue, by share gains in India. Their price target goes to $325. Guys, back to you.
Is Apple just pricing it right, do you think, Mike?
Yes, it's pricing it right if it wants to create a little bit of a perceived and actual shortage, obviously also preserving plenty of profit for itself. So I do think you could probably spin that either way, either they kind of got caught a little bit short or not. What I think is interesting is the stock itself. I mean, look at how ridiculously orderly that increase in the stock has been since August. It's basically like people want to own stocks, and Apple's our favorite flavor of stock. That really is the way it's traded. It's not entirely about the absolute fundamental outlook for the corporate, the business itself.
To the Rosenblatt note, a little miss on Chinese iPhone sales. Is that enough to derail the story for everyone else? It's not like it's the fundamental issue for the stock.
I would say not in this environment, no. There's too much else probably going right that people are more focused on.
Let's get to FedEx numbers. Eric Chumey's got them for us. Hi, Eric.
Hey, Wilf, that's right. So you see the stock down about 5% here. This is a miss on both the revenue number and the profit number. The FedEx also issuing guidance that is lower than the street was expected. And the CFO in the report, making a note here, our revised guidance reflects lower than expected revenue at each of our transportation segments and higher than expected expenses driven by the continued mix shift to residential delivery services. And they're implementing reductions to their air network. They're restricting hiring, and they're trying to find ways to optimize their network. So this is a bad earnings report here on the face of it, and we'll dig in more and have more details as we dig through more. All right, back to you guys.
Thanks so much, Eric. Down 4% in after-hours trade following a couple of days of bad trade already, Mike. So the setup wasn't particularly tough. Both lines missing and weak guidance on top of that.
Yeah, in the last at least 2 or 3 quarters, it has seemed as if expectations were very low going into FedEx's results, and the results in the guidance were actually worse than people were positioned for. So that seems the case right here. Obviously, stock is up off the lows, which is in the low 140s from September, October. So it built in a little bit of a cushion there. But obviously, saying it's going to continue to be very challenging in the current fiscal year is not necessarily welcome news.
Fund managers are still pouring money into the tech sector. That's according to Bank of America's Global Fund Manager Survey, which found the most crowded trade in both November and December is long U.S. tech and growth stocks. Coming in as the second most crowded trade is long U.S. Treasuries. Patrick, what do you make of this crowded space? Is there more room for newcomers?
Well, I think right now what we're seeing is growth has been the area where investors have been looking, and that survey is just a reflection of the fact that investors really wanted to find that growth, and they were gravitating towards the stocks which appeared to have that. And that happened to be technology, and it happened to be growth stocks. I think going forward, the story for 2020, however, is going to be the rotation that we're going to see to value stocks. Right now, industrial production data is coming in quite strong. We're in the process of seeing a bottoming in that portion of the economy. Value will be the theme that leads in 2020, and investors need to rotate towards that.
Keith, what do you think?
I get cognitive dissonance with the way you let in there. I mean, people are putting a lot of money into growth tech stocks, and they're also putting a lot of money into U.S. Treasuries. They seem counterintuitive to me. People are caught in a couple of minds. But listen, you've heard me all hour. I would be putting money into technology and growth stocks. I think it's the way in developed markets, certainly over the next 2 years, it's the way we continue to squeeze productivity out, especially as the population continues to age and we're searching for workers. I think you pick the right stocks. Apple is one for me. Every time I bet against that stock, I've gotten beaten up. And then the others that are providing payments processors, good quality tech that will run our lives here and globally in the future.
I would say, though, that the way to unify those things is there's a scarcity of long duration cash flows, or perceived scarcity. People are willing to pay up for them. And keep in mind, this is what survey respondents say they believe the most crowded trades are. So it's, in a way, it's the stuff that's done the best that I didn't own enough of, and I think other people might own too much of. So there's lots of ways to parse it, but I think that's what it's about. Very, very low yields, lower than what you think, inflates the valuations of growth stocks.
We will leave it there, guys. Thanks so much, Keith and Patrick, for joining us.
still ahead. We have much more on this big move lower for FedEx on the back of an earnings and revenue miss.
And Mike will head to the telestrator to break down the S&P and if the market is becoming too top-heavy. Closing bell back at 9.
This week at Tesco, whole beef roasting joints and whole legs of lamb are half price. That's a whole lot of halves off a whole lot of wholes. What a mouthful. Tesco, delivering Christmas for 100 years. Max 2 per customer, selected stores, excludes Express, ends 31st of December.
Slam dunk! The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. 4 of the league's top teams are in action as the Lakers take on the Bucks at 8 p.m. Eastern, followed by the Rockets taking on the Clippers at 10:30 p.m. Eastern. 11-2. This Thursday, the Lakers are at the Bucks at 8 p.m. Eastern, and the Rockets are at the Clippers 10:30 p.m. Eastern. Search NBA on TuneIn to follow your favorite NBA team today.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, plunges into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
Welcome back. FedEx earnings missed estimates just moments ago, both top and bottom line, and soft guidance down 5% after, of course, already having a little bit of softness coming into these results today. Let's bring in Don Broughton, managing partner at Broughton Capital, for his reaction. Don, first take.
Well, it's very highly disappointing. It's clearly a miss. If you look at the initial number of 213, it's a huge miss. If you give them credit for the 251 adjusted, it's a huge miss. But then, especially when you start looking through the details here, there's a 51 cent a share tax benefit. That's not repeatable. That's not ongoing cash flows. But it's symptomatic of what we've been seeing in international air freight and to a lesser degree domestic. Bottom line is that the global air freight economy is feeling ill at best.
But if this is that factor alone, which I know it's not alone, but if it's predominantly that factor, then trade war easing, a bit of a global GDP pickup could help this a lot next year.
Well, it could, but we've been hearing about the trade war easing, about them having a deal for how long now? 2 years. At some point, I'm tired of hearing the boy cry wolf. I want to see a wolf, or I'm not going to believe the boy anymore. And that's the bottom line. And we continue to see, we're now seeing in Asia and Europe negative on top of negative volumes. And bottom line is that they have re-engineered this company, rebuilt the IT, the infrastructure. It's the most efficient it's ever been, but they can't show that off when they don't have any volume to move through the system.
Well, so what's that going to take? I mean, do they need more aggressive sales? Is there a management problem? What's the factor here that's keeping them from really exploiting where they've become super efficient?
No management team in the world, the best salesman on the planet, can't fix the decline in air freight from Germany to China, from Korea to China, because of the tariffs killing the demand. And we're seeing it in multiple secondary and tertiary waves in which the tariffs are destroying economic prosperity. That's the bottom line. You can put the anointed, Christ himself in the CEO chair, and anybody you pick as a salesman, and it won't change the fact that the macro global is sick and getting sicker.
Don, are there any more levers they can pull in the year ahead to lower their costs to offset some of these pressures that they're seeing?
Well, I'm sure. Yeah, they're retiring some additional planes, some of the oldest of the fleet, and let's give them some credit where credit's due. they're making an extraordinarily tough strategic decision to kick Amazon, $1 billion a year in revenue customer, to the curb because they weren't making any money. There was zero. I'm convinced there was zero margin. They weren't making any operating profit. But because strategically, that's the best thing for this company long term. Look at what they're doing with their partnerships with Walmart, Walgreens, et cetera. Those are a result of companies that want to do business with FedEx because FedEx doesn't want to do business with Amazon, and they're aligning themselves. Walgreens and Walmart see Amazon as a real threat and are going to partner with FedEx to take on Amazon. And this petty announcements that Amazon's making, I don't know if I would do that. It's petty, and it's an exercise in rearranging deck chairs. The history is long. You don't want to mess with Fred Smith and FedEx. They are not a competitor you want to annoy.
That might be the case, Donald, though I wonder if the fact that you say the Amazon business was basically zero profit for FedEx and all of these e-commerce players are essentially bundling fastest possible delivery in with the cost of the product itself. In other words, is that depressing the willingness of customers to pay up for delivery more broadly?
No, you've got two factors going on. First of all, e-commerce is paying or subsidizing express delivery because they have to and because they can. They have to because that's how you close the distance between what is immediacy going to a brick and mortar store and being able to take it home with you, eat it, consume it, wear it, etc. And they can because they're not paying for the real estate or the utilities or the greeter or the checkout clerk, and so they can spend some of that money back against expedited delivery. You know, I know for a fact Jeff Bezos went to his distribution team, his transportation team, and he said, "Look, guys, this is my edict. This is my challenge to you. 80% of the U.S. population lives within 20 minutes of a Walmart, which means you can get in your car, drive to Walmart in 20 minutes, walk into the store, pick out what you need, check out, and be walking back out to your car in 20 minutes, and then drive home in 20 minutes. That means within an hour. If 80% of the population of the U.S. is within 20 minutes of a Walmart, we need to be able to, in order to compete with Walmart, be able to make our delivery happen. When he issued that edict, he basically declared war on Walmart. But he also puts it in crystal clear relief what's going on here. One. Two, FedEx is doing this strategically. If you look at the marketplace, the highest cost provider per package delivered in the market is the post office. The second highest cost provider of the service is UPS. The lowest cost provider with the best service is FedEx. So the more and more Amazon, let's say the critics are right, Amazon becomes a big player in this industry. The bigger they become, the more they crush the post office, the more they hurt UPS, long before they get to FedEx. So FedEx is saying to themselves, look, let's align ourselves with partners we can do things with and make money with, one. And two, if Amazon wants to come after us and come after our market, they're going to kill the post office and seriously damage UPS long before they get to us because we're the lowest cost provider of the service with the highest speed quality.
Right. Don, we'll leave it there. Thanks so much for joining us. FedEx down 6%, UPS also down a couple of percent in after-hours trade in light of the FedEx numbers. Still ahead, we will break down the charts to find out whether the S&P 500 is too concentrated in the largest stocks.
And later, we discuss the NHL's embrace of sports betting and the push to diversify the league when we speak to Commissioner Gary Bettman in a First on CNBC interview.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
Slam dunk.
The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. Four of the league's top teams are in action as the Lakers take on the Bucks at 8 p.m. Eastern, followed by the Rockets taking on the Clippers at 10:30 p.m. Eastern.
11-2.
This Thursday, the Lakers are at the Bucks at 8 p.m. Eastern, and the Rockets are at the Clippers, 10:30 p.m. Eastern. Search NBA on TuneIn to follow your favorite NBA team today.
Cutting for the net, scores! On the goal line, Marshawn scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Whether you call yourself a Democrat, Republican, Independent, or something else, the road to 2020 is on TuneIn.
What a night!
And a complete earthquake. This was
Follow every step of the Democratic primaries while hearing the latest headlines from the White House with live 24-hour news from CNN, MSNBC, Fox News Talk, and more.
We're closing in on the first results in the battle for the White House.
Experience the election through the sources you trust with the nonstop news channels on TuneIn.
All right, Mike Santoli has a third dashboard of the day. Mike?
Hey, Tessa, asking right now if the market is stacking the line, basically putting just a few of the biggest guys up front to try to make some progress here. Look at this chart, it's pretty long term, of the percentage of the S&P 500 accounted for by just the biggest 10 holdings. So the 10 largest companies in the S&P, what percentage of the overall index do they represent? Right now, it's about 24%. Pretty much is at its peak since about 1999 and 2000, when you did have this mega cap leadership. The very largest companies in tech especially were much larger than the rest of the market. So, you know, during the height of sort of FANG mania in 2015, 16, 17, people would say, oh, it's only 4 or 5 stocks. That really wasn't the case. And I was sort of very skeptical of this idea that the market was getting too concentrated. Well, maybe it's edging in this direction. Now, the real reason to worry about this, though, is if other stocks below the surface are just not participating at all, and you see a stealth kind of bear trend underneath the biggest ones. That's not necessarily the case. This chart looks at the equal weighted version of the S&P against the regular one. So you see that the regular S&P, the market cap weighted version, has certainly outperformed over 2 years, but these are both going in the right direction, almost along the same path. So yes, the biggest guys are getting bigger proportionally, but it's not as if the rest are being left in the dust. So that's why I don't think it's something to be outright too nervous about right away, but you have to watch this trend.
So coming into the 2000s, did that not happen?
Coming into I'm sorry, yes. In like 1999 and 2000, the average little stock was really far underperforming, and you did have this hyper concentration by the end of it. Also happened in the early 70s, so-called Nifty 50 stocks. So, you know, there was an instability in the market that was not reflected in the indexes.
All right, Mike, thanks. An impeachment vote in the House may be looming over President Trump, but our next guest thinks the China trade deal and other White House wins could give the market and the president a boost in 2020. We'll have those details straight ahead.
Plus, we'll have an exclusive look at how Amazon's blue vans are the key to its free next-day shipping strategy. We're back in a couple minutes.
Nothing comes easily. That's what happened.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you. Whether you call yourself a Democrat, Republican, Independent, or something else, the road to 2020 is on TuneIn.
What a night! And a complete earthquake. This was
Follow every step of the Democratic primaries while hearing the latest headlines from the White House with live 24-hour news from CNN, MSNBC, Fox News Talk, and more.
We're closing in on the first results in the battle for the White House.
Experience the election through the sources you trust with the nonstop news channels on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
Back to throw, fires right on the slant. Caught, touchdown.
He leaps and he surges in, touchdown.
This Saturday at 7:30 p.m. Eastern Time, the lights shine bright on the Las Vegas Bowl. Washington Huskies head coach Chris Peterson will coach his final game before retiring as he takes on his former school, the Boise State Broncos.
Down to the 5, he leaps for the end zone, and he is in.
To listen to this and every bowl game, just search college football today.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Here's a check on the closing bell big board. At the top, the major averages all closing at record highs. Below, today's best performing sectors: consumer discretionary, financials, and utilities. The biggest Dow gainers: Goldman Sachs, Johnson & Johnson, and American Express.
I wonder why they're in blue. Why are they not in green?
Because then they would just go along with the major indices and the sectors.
They're over more than 1%.
Is that the reason? It's a new nuance of the closing bell big board that none of the three of us know the answer to.
Or their
But maybe
stocks,
somebody
they're not
will
indexed.
tell us.
But we're
Is that
so good
why?
at guessing.
Because they're stocks. There we go. That could be it. No one's going to be able to confirm this. I think that nobody knows the answer, even in the control room. But anyway, we should move on. Maybe Bill Griffith has the answer. He certainly has the CNBC News update for us.
You never question the graphics people. They know exactly what they're doing, Will. Here's what's happening at this hour right now, everybody. The Senate has passed that massive defense funding bill with the landmark provisions for paid parental leave and the creation of a space force. The $738 billion bill sailed through after easily passing the House last week. By the way, it also gives troops a 3.1% pay raise, their largest pay raise in a decade. Elsewhere on Capitol Hill, a Senate panel and the NCAA convened this morning, the first of many collaborative conversations surrounding the issue of college student-athlete compensation.
I would like to see us work with the NCAA and work with student-athletes to try to come up with a federal solution that not only addresses the issue of having access to revenue through name, image, and likeness, but also speaks to issues of broader compensation.
Finally, Pope Francis has abolished the so-called pontifical secret rule that's been used in various clergy sexual abuse cases after mounting criticism that the confidentiality measure has been used to protect pedophiles. A Vatican spokesperson says it is a step on the path toward transparency. That is the CNBC News update this hour. Back to you guys.
Bill, thank you very much.
My pleasure.
It's time to get a news alert now on Palo Alto Networks. Josh has it for us. Hi, Josh.
So, Wilf, this news coming from the SEC just now, announcing insider trading charges against 5 friends who traded on confidential earnings information about, the SEC says, a Silicon Valley cloud computing company. They reaped millions of dollars in trading profits. According to the government, a former IT administrator, then at Palo Alto Networks, was at the center of this trading ring. They say he used his credentials and work contacts to obtain highly confidential information about his employees' earnings and financial performance until he was terminated earlier this year. Apparently, he tried to purchase a one-way ticket to India for himself and his family and was then arrested at the airport. We have reached out to Palo Alto Networks for comment. We'll let you know if and when we get it. Guys, back to you.
All All right, thank you for that, Josh. Congress on track to pass massive spending bills today and send them to the president to sign, which would avert a government shutdown. That is not the only Washington news. We have the impeachment vote tomorrow and USMCA waiting in the wings. Here to break it all down for that and what it means for the markets, Ed Mills, Washington policy analyst with Raymond James. Of these, which do you think has the most likelihood, Ed, of having an impact on investments and our bottom line?
Yeah, I think it's probably most collective. Everything outside of impeachment is a really big macro positive coming out of Washington this week with the USMCA. You have the situation where business confidence and business spending has been the biggest drag on the economy this year. So if you can get that passed and give some business confidence out there, you probably put that as number one. But right behind that, by not having a government shutdown, extending a whole bunch of tax provisions, doing a lot of the cats and dogs that were left over for the year, that's adding a ton of fiscal stimulus to the market. And when you have the Fed largely on the sidelines being more accommodative, you add these all up together, and this is a really nice macro backdrop that DC is giving us for Christmas.
I read that you think that the USMCA has the potential here to really boost CapEx spending. Can you explain why and how?
Yeah, I think it's been the story all this year has been about uncertainty. We've had China trade kind of going back and forth. As soon as folks started to move things back to North America, especially to Mexico, the president threatened a whole bunch of tariffs on anything that came in from Mexico. So now where we're going to have signed into law a new trade agreement between the United States, Mexico, and Canada, that gives businesses much more certainty here, at least in North America, allowing them to invest into the future. And I think this is something that they've really been hoping and waiting for, removing that big overhang that NAFTA could be pulled at any moment.
And Ed, those positives far outweigh the potential negative impacts of the impeachment?
Yeah, I mean, I think what most of us here in D.C. have been thinking is that the base case is playing out as of right now. So the House is going to vote for articles of impeachment, and everything points to that the Senate is not going to vote to convict. So once we've kind of moved from that story, we look at the rest of the backdrop, and the rest of the backdrop is largely positive from a macro perspective, at least up until the caucuses and the primary start for who's the next nominee for the Democratic Party. That is probably the point where DC once again adds to the conversation and adds to the volatility.
And on that note, you've been monitoring a bit of a pickup for Bernie Sanders, which is a potential market risk if his momentum continues in your eyes.
Yeah, you know, so what we've been discussing is that we've been trading who's the front runner in the Democratic primary process for a while. The one person who really hasn't gotten that front runner status just yet is Bernie Sanders. But consistently, he's been at that 20-25% level, number one or number two in Iowa, New Hampshire, and nationally, especially number two spot nationally for a while. And so if other candidates who've kind of surged into that front runner status, if they fizzle, the one person that seems to have the highest floor of support nationally has been Senator Sanders. So we're expecting that sometime between now and February, we're going to have much more conversations about what his candidacy could do and if he really could make a run. We're not calling for him to be the Democratic nominee, but he hasn't had the conversation that others in similar polling situations have had to date.
How much of a risk do you see the skyrocketing federal deficit?
Contessa, what they tell you on Capitol Hill is supposedly it doesn't matter anymore. So one of the things that we talk about in D.C. is that we only respond when there is a crisis or a deadline. What we've seen for years now, and it seems to have accelerated since the election of President Trump, is that through spending bills and through tax bills, this Congress, this president are fine to add to the debt and the deficit, and we have a fairly accommodative Fed. And so in the near term, DC, from a fiscal and monetary stimulus perspective, is a positive backdrop to the market. There is going to be a time that we have to deal with that, but right now, it's nowhere in sight.
Ed, very quickly, for Mayor Bloomberg, when does he need to have made gains to double digits or to be third or fourth in the race? When does he need to have got to that status for it not to be worrying for him?
Yeah, so I mean, I think we have all the way until March for him. He is not going to be competing in the first 4 contests. He is going to only start competing on Super Tuesday. And so what will be interesting to me is that I'm looking to see if there's going to be a different winner in Iowa versus New Hampshire, South Carolina, in Nevada. And if that's the case, and if he can come in and make a splash on Super Tuesday, that's where the conversations about a potential brokered convention really increase. And if we come out of Super Tuesday and we split up those 1,500 delegates, a third, it's going to be mathematically very difficult for any one candidate to emerge as the front runner, get that 50% of the Democratic delegates. And I think that's one of the things that Mayor Bloomberg is playing for, that and also trying to be the heir apparent if Biden falters in any of these early contests.
Ed, thanks so much for joining us.
Well, thank you.
Still ahead, Amazon is trying to win the holiday shipping wars with free next-day shipping. Up next, we'll get an exclusive look at the branded vans behind that strategy.
Plus, NBA Commissioner Adam Silver says the pay TV system is broken. Find out if NHL Commissioner Gary Bettman agrees when he joins us in a First on CNBC interview.
CNBC News Update is sponsored by Comcast Business.
Ho, ho, ho. Who's made a list this year? I want a new phone. One with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12th 19. Claim from Samsung within 30 days. T's and C's apply.
This week at Tesco, whole beef roasting joints and whole legs of lamb are half price. That's a whole lot of halves off a whole lot of wholes. What a mouthful. Tesco, delivering Christmas for 100 years. Max 2 per customer, selected stores, excludes Express, ends 31st of December.
He leaps and he surges in. Touchdown.
It is college football bowl season on TuneIn. This Friday at 2 p.m. Eastern Time, the bowl season kicks off from the beautiful Bahamas.
Back to throw, fires right on the slant. Caught, touchdown.
The Charlotte 49ers will be playing their first bowl game in school history. They'll be matched up against the Buffalo Bulls. Don't miss the first bowl game of the season. To listen to this and every bowl game, just search college football today.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
We have some news on Wynn Resorts. The contract for CEO Matt Maddox has been extended through to 2022. Significant because, of course, this year has seen the resolution of some big outstanding issues, the regulatory hurdles that they had to cross in the wake of the scandal involving founder and former CEO Steve Wynn, the settlements that the shareholder lawsuits just happened within the last couple of weeks. This clears the way for them to really focus on ramping up the new property in Boston. And of course, 2022 is significant because that's when the concession is due for renewal in Macau in China. And so having him in this leadership role is important for this company in continuity.
Wynn stock up some 35% year to date. So we've just got some FedEx numbers that disappointed. The stock now negative for the year as competition with Amazon continues to weigh on the stock. And it is peak shipping season. We're a week away from Christmas, and Amazon's free next-day shipping has officially kicked into high gear. Frank Holland joins us now with an exclusive first look at that process. Hey, Frank.
Hey there, Wolf. You know, Amazon's been working on its ground game. The company's global fleet of those blue-branded delivery vans has increased by 150% since June of 2018. Those vans deliver the majority of free one-day shipping